what's up? Red Panda Anthem. Red Panda, what's good?
So let me ask you this. What are your thoughts on the handling of the economy by the Fed this year?
My thoughts on what? I'm sorry, can you speak up?
The Fed's handling of the economy.
Okay, Fed. Okay. I should disclose that I hired a young man to work for me years ago, and he was at our firm for a number of years, and he left. His name is Jay Powell. So now he's the chairman of the Federal Reserve Board. But he doesn't give me any insights. The Federal Reserve made a terrible mistake. They underestimated how serious the inflation was going to be. The United States government injected $5 trillion into our economy to deal with COVID. And you put $5 trillion into an economy that's roughly a $22 trillion economy, you're going to get inflation. So we got a lot of inflation. The Fed said for a while it's transitory, which means it'll be gone soon. They were wrong. So now they're going to increase interest rates a fair bit to get inflation down. Now, as you may have seen last week, inflation came down a little bit, still at 7.7%. The Fed wants to get inflation down to 2% per year. That's what we've had for the last 25 years, 2% a year. It wasn't a big factor. Getting it back to 2% is not easy. I know a lot about inflation because I worked in the Carter White House when we got inflation to 19%. Nobody's ever do that again, right? So inflation is,
please.
Right. So I would say the Fed is now serious about fighting inflation. They're going to keep increasing interest rates for a while. And I suspect in December, they will have another meeting and they'll increase interest rates by another 75 basis points or almost 1 full point. So, I think the Fed has probably made a mistake in the beginning. Now they're trying to compensate for it. I think they're doing a reasonably good job now.
In light of the FTF scandal, looking back at the interview that you did with Sam, as an investor, is there anything in hindsight that made you say something about him or the strategy of the company didn't feel right?
Which about who?
FTX.
Oh, FTX. Yes. Sam Bankman-Fried. Well, it was the only interview I ever had where the guy showed up in a T-shirt, shorts, and tennis shoes. That's all he wore. And that was his normal dress. So it was a little unusual. Usually people dress a little bit better for the interviews. He's look, you meet a lot of people in this world who are brilliant young people. And when you're a brilliant young person and you haven't had a failure, you think you really are brilliant and you walk on water. So he had never made a mistake, really. He built a business where at the age of 30, he's worth $22 billion. So when you were 30 years old, you guys look like you're maybe a little older than 30, I don't know.
Yeah.
But when you were 30 years old, if you were worth $22 billion, you would think you walk on water.
Absolutely.
He may have thought that. Yeah, I would say it appears that they made a terrible mistake, and whether it's criminal or not, I don't know. But they were taking customer accounts and putting them into other businesses that the customers didn't know about. So let's suppose you have an account at Merrill Lynch and you put $1,000 into it, and they told you later, well, guess what? We took that $1,000, we lent it to something else, and we'll give you your $1,000 back soon. Well, before they could give it back to you, it went bankrupt. So you're out your $1,000. That appears to be what they did. And therefore, there's a lot of challenges there. So he's a smart guy. I've met him on a couple of occasions. I would say, you have to be wary of people who are 30 years old and think they walk on water, because it rarely happens.
Noted.
So now, there was one 33-year-old guy that did walk on water, but that was unusual.
I had to get off the boat so I can walk on water. Yeah. I love it. Obviously, one of the greatest investors of our time, obviously the Carlo Group, like we said, 400 billion managed in assets. Prior to even getting into finance, I know you studied law. So what was that transition like from you going into law to finance?
Well, let's be honest. If you're going to be good at something, you have to love it. And I didn't love to practice law, and my clients told me I wasn't that good at it. I went to law school to make my mother happy, because she said you can either be a doctor or a lawyer. So I didn't want to go to medical school, so I went to law school. And I was really interested in politics, and so I was really interested in working in government. And I went to work for Jimmy Carter at the White House for 4 years when I was in my 20s. And we got inflation of 19%, and the result was we didn't lose. We lost the election. So I had to go back and practice law. That's all I knew. But I wasn't that good at it. My clients reminded me of that. So I decided to do something different. And I started a firm in Washington in 1987 that grew to be one of the largest private equity firms in the world. So I got lucky. I surrounded myself with really smart people that knew more than I did. And the key to really building a great business is surrounding yourself with smarter people than you. So That's what happened. I built it. It's now one of the largest firms in the world in that area. But I was attracted to it because I thought, if I'm going to be not in government, and government doesn't want me because I didn't do a good job, and I'm going to be in the private sector, I might as well make the most amount of money I can make. And business people and private equity firms are making a lot more money than lawyers, and they ought to actually seem to be more enjoyable. So that's why I started it, and it worked.
So let me ask you this. You talked about inflation a few times. Last week, a report came out, and they said that they thought that inflation might have peaked, and that was good for the market.
Right.
Do you think that inflation has peaked?
Well, it's an interesting question. Last week, the numbers came out that said that inflation rate from month to month, year to year, was 7.7%. Now, if I told you inflation was going to be 7.7% annualized, you would run for the hills. But because it was previously over 8%, it was 8.6%, 7.7% looked wonderful. So yes, it may have peaked. I think it probably has. But remember, inflation was very high because we injected so much money in the economy. The war in Ukraine had a very high effect on energy prices and the food supply chain. So there are many things that produced this high inflation. I think it probably has peaked, but nobody really knows for certain. Now, I'd say if the war in Ukraine were to end in a couple months, that would be great for inflation. And if Ukraine could start producing and shipping wheat again, that would be great for inflation. But I'd say it's a little premature to say it's peaked because we need a couple months of data. Just 1 month isn't probably enough.
I'm looking forward to reading your book. Can you share with us what's one lesson you learned from maybe Jim Simmons, Ken Griffin, and maybe John Paulson around how they invest, and a very impactful lesson that will help our audience tonight?
Well, Ken Griffin is a guy that built one of the most successful hedge funds of all time. He's also got a separate company called Citadel Securities, and he's extremely wealthy. He basically believes in analyzing data very carefully. He surrounds himself with really, really smart people, and he tries very hard to get the best people in the country who are really good with numbers. He tries to steal people from Google, not steal, but recruit people from Google, Facebook, Microsoft, Apple, get really smart people and who know numbers, and they really analyze these things carefully. John Paulson made one bet. It was a bet that the mortgage market would collapse. And at the time, people didn't think it would be quite as bad as it turned out to be. So he made on one investment $20 billion.
Yeah.
$20 billion. So you don't have to do anything the rest of your life if you make $20 billion investment, right?
It's a good trade.
Sounds about right.
So I'd say it was the greatest trade of all time. And so he did pretty well. But basically, he analyzed the fact that mortgage market was probably inflated, and he correctly bet on that.
Yeah, most people say no risk, no reward. Obviously, in your space, when you're managing people's money, that may not be true, or maybe it is. Can you talk about the importance of risk management when you're talking about private equity?
I think what in private equity? I'm sorry.
Risk management. The importance of it. Well,
risk management is a way of managing your money where you're basically in effect hedging. You're trying not to get the highest rate of return, but you're trying to protect against the downside. Private equity is different than that. Private equity is basically saying we're going to fix a company, make it better. We're not trying to hedge against it. So it's different. I would say depends on what somebody really wants out of life. If you're 75 years old and you're living on a retirement income and you don't have a lot of money coming in, you don't want to take a big risk. So you probably have a more a risk management kind of approach, which is to say you're protecting the downside. If you're 25 years old and you can take a lot of risk, because if you make a mistake, you can go make money again, probably private equity might be better for you because you're willing to take the upside and you don't need to protect the downside so much. It depends on your situation. How much money can you afford to lose? For example, cryptocurrencies, I always told people, don't put more in than you can afford to lose. And some people did.
People did. Oh, what's your economic outlook for 2023?
I would say for 2023, I suspect the United States will probably go into a recession. That's a very common view. And that's because if you go back to 1960, almost every time the Federal Reserve has increased interest rates dramatically, the result has been a so-called hard landing or a recession. So it's unlikely we're going to be able to avoid it this time, but it'll probably be very modest. I don't expect it to be a serious inflation of the type we had in the serious recession of the type we had in the Great Recession of 2007, 8, 9. I suspect it to be a 2-quarter recession. And, 2 quarters is not that serious. So I think the economy will probably slip a bit in that period of time, but I think inflation will come down. The unemployment rate will go up. I suspect the unemployment rate will probably go up to about 4.5% next year, something like that. Congress is not going to do anything. Not that anybody will notice or want Congress to do anything. But, Congress isn't going to spend much money because there's just not a lot of money left to spend. We have $30 trillion of debt in this country. This country, you and I, owe other people $30 trillion. That's a lot of money. And we can't afford to borrow much more.
This that Red Panda Anthem. Ian, what's up? This that Red Panda Anthem. Red Panda, what's good? Red Panda Anthem. Your boy going up. I know they can't stand it.